Good morning, traders, and welcome to the live stream. My name is Charles. I come from a community called Piratetraders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. I appreciate you all joining me this morning. It should be a very interesting week in the stock market that we have ahead of us here. So there's a lot I want to cover this morning. I'm going to try to do it as compressed a way as possible so that if you're watching this later, you can just watch the first 10 minutes or so and kind of consume everything. But here we go. Okay, so first things first, we need to clarify that anything I'm about to talk about with TA means nothing when comparing to something that Trump could do. I see two things jumping out at me right now. Trump saying this morning that he's going to make an investment announcement today and that tomorrow night will be big. Now, we don't know what this is. This might not have anything to do with investing, but these types of things make the market more cautious. People don't want to take on risk if they don't know what's coming. So that is just something to keep in mind, that at any moment, whatever we are seeing can instantly change. That is just part of trading with the Trump presidency, is that he can say one thing and the whole world changes their opinion, and suddenly, investment money flies one way or another. Another thing I wanted to mention is he talked about creating a cryptocurrency strategic reserve. Obviously, if you're into crypto, this is a very, very big deal. And the ones that he listed, which is just insane to me, but he listed Bitcoin, Ether, XRP, Solana, and Cardano. So if you own any of those, it was probably a good weekend for you, or at least not so painful as it has been as of recently. I have no idea why they would include all this garbage in a strategic reserve. To me, it makes sense to just do Bitcoin, to call Bitcoin digital gold and say you're buying it for that reason. But of course, his children are heavily invested in all of these assets, so he wants them all to go up. Okay, so everything in context, right? Let's start with Friday. We'll start with the conversation about Friday so that we can understand what's going on in the markets. On Friday morning, when the market opened down here, what were we talking about on the live stream? Well, we were talking about the fact that yes, we had momentum lower, and yes, that was bearish, but we were at the bottom of a balance area on a weekly time frame. This is an area where the market has been balancing over a series of months in this range. So what did that mean? It meant that on Friday morning, either thing could happen. We could either break out of this balance and begin a much larger move to the downside with probably weeks and weeks of selling ahead. We could go sideways and spend a day just kind of grinding around there, trying to decide which way to break, or we could turn around and start heading back up, which would increase the odds that the market is still in balance. Meaning the highest probability is that the market is going to turn around and head back up to that weekly balance area high around 61.20. Those were the three options that were available to us yesterday on Friday. Okay. So what ended up happening? Well, the market spent the first part of the morning balancing, grinding, chopping, trying to decide which way it's going to break. And then at the very end of the day, we got this big spike up, this big break. This is very important to me as a carry forward. This is very bullish to see, because when the market gets to a balance area high or a balance area low, it is normal. It is expected that market is going to chop and grind and try to fake people out both directions before it breaks away. Being that this was a balance area low on a weekly time frame, it could have meant multiple days of grinding and chopping sideways at this balance area low, where we would have tons of confusion as to which way the market was going to break. By doing this spike up at the end of the day on Friday, the market was telling us the balance is over. It was telling us that's all the chop we needed. Less than 1 day worth of grind at that balance area low was enough to bring in the buyers to begin the process of sending us back up to the balance area high. So that spike up at the end of the day on Friday is extremely bullish to me. The fact that, and again, we still have, 25 minutes before the market opens, but the fact that we are now going to open with a gap up on top of a spike up is literally the most bullish scenario you can possibly get. The only thing that is more bullish than starting a day with a spike up followed by a gap up is if the market is breaking away from a balance area high or a balance area low, because then you know momentum is part of it. So let's talk about that momentum. When I say we have potential for momentum, what am I talking about? Well, most of the market on Friday was either flat or short, right? Throughout this period of time, as the market sold off from the all-time highs and worked its way lower, for it to be able to get down to here, more and more participants had to be exiting their longs and entering shorts, right? That's what it takes. If it had just been exiting longs, we would have gotten a dip and then the market would have turned around and started going higher. So the fact that we sold off and then got new sellers and continued that momentum lower means not only did we liquidate longs, getting people flat, but we also got new traders short the market. So now you have traders that are flat and traders that are short. So what about this morning? Well, now after this big move up at the end of the day on Friday, and in particular, if we open with a gap up this morning, what's going to happen to these traders? What's going to happen to the people who are either flat because they thought we were going to enter a massive recession and there was going to be a 20% dip in the stock market and they were expecting the world to collapse, so they got flat. What are they going to do if we start to push our way back up towards the highs? They're going to get long. They're going to chase price, right? What about the shorts? What about everybody that got short last week because they thought the market was going to continue to tank this week? Well, when they open up their charts this morning and they see a gap up, they're going to be very nervous and very likely to cover their shorts. Now, again, we won't know for sure until the market opens and we see what happens with the gap. But if we either get a gap and go or a gap fill and go this morning, so what does that mean? It means the market opens and it doesn't even come back to yesterday's range. It just opens and it immediately starts to trade higher. That's a gap and go. A gap fill and go would be the market comes back to yesterday's high around 59.71, finds support there, and then it turns around and starts heading higher. Okay? If either one of these two scenarios happens today, this market has a potential to squeeze a lot of sellers, which means we can start a lot of momentum up. So as crazy as it might feel right now to be looking at a chart and thinking this thing could turn around and go all the way back up to 61.20, I'm telling you, it is not unreasonable. It happened here. It happened here. It happened here. It happened here. Okay? It is not unreasonable for this market to squeeze all these sellers, and that alone, just squeezing the people that are short and bringing in some FOMO buyers, could get us right back up to highs. Okay? And so how will we know intraday today if that is happening? The first signal, the very first thing you will see is you will either get a gap and go where the market immediately starts to go higher, or you will fill the gap and then find support around yesterday's high. Okay? Those two to me are the most likely scenario now, purely because of the balance area. Okay? Purely because we could not break out of balance to the downside. The highest probability is a rotation to the upper end of balance. So that is what I think is the highest probability. Now, let's say I'm wrong. The market opens this morning. We trade down to Friday's high, 59.71. We start to spend time and bring in volume inside Friday's range. Well, the more time and the more volume, the less bullish I am, right? If this market is going to get the short covering and the momentum to the upside that I believe it is going to get today, it should not spend a lot of time inside yesterday's range. I'm talking, if you made me give you an exact amount of time, less than 10 minutes. Like, it should not spend a lot of time inside yesterday's range. It should poke in there for a little bit and grind around a little bit, but then it should find support and bounce back up out of there and get above yesterday's high, Friday's high. Okay? The more time it spends inside of Friday's range, the more volume it brings in, the less likely we are to get that short covering and get that move to the upside. So with time and volume inside yesterday's range, I become neutral. I am neutral, assuming the market just needs to grind around inside the overnight range. So that is above 59.49. If we get below 59.49 and we still get more new selling, then I would be looking for a move to the downside. I would be bearish to head down and test 59.15, which is the beginning of that spike up. That is also an excellent place today for the market to find support and then turn around and head higher. So I would not be bearish beyond 59.15. I would be assuming buyers will step in there and defend. And so even if we start the day this morning with a sell-off, once we get to 59.14, that's where we start to go sideways. Okay? And we start to cool off. If we get new selling below 59.14, okay, if we get new selling below the base of that spike, then I start to get very, very bearish. Then I say, okay, we are not actually rotating to the opposite end of balance. Let me go back to the daily chart. I say, okay, if we come all the way back down to here, then I say, okay, we're not heading to the opposite end of balance. We're coming back to test the lows once more. So I am then bearish to get to yesterday's VPOC and even Friday's lows potentially. But again, there's a lot that has to happen before I become bearish like that. First, the market has to fill the gap and there be no buyers. Then the market has to spend time and bring in volume inside the previous day's range. Then the market has to get below the overnight low and spend time and bring in volume. Then it has to sell off down to the base of the spike and not get a bounce there. Then it has to come below the base of the spike and spend time and bring in volume. I got to see all of that before I really assume that we're still testing this balance area low. If I see all of that, I'll change my mind. That's how it works. When the information changes, you change your mind. But right now, the information is saying the higher probability is that we find support somewhere around yesterday's high and we keep going. And that is because of the balance on the weekly time frame. Any questions on any of that? It is very important to understand. Old business becomes new business. If the market is overly short, if a majority of participants are either flat or they are short, and all of a sudden they start to panic because the market has a gap up, guess what happens? That creates momentum. That creates more people covering short, which gets more people to FOMO buy, which gets more people to cover shorts, and the process just continues. And all of a sudden, you're all the way up at the balance area high, and you don't even know how you got there. Any questions on any of that? Boy, the chat is quiet this morning. Hello? Hello? Is anybody there? We got 81 people hanging out. Only 14 thumbs up for the pirate. Please smash that like button. We got Trevor in the house. Good morning to you. Griff is here. Welcome, welcome. Nap, good morning. Outer Edge Trader, welcome, welcome. Debbie B in the house. Kevin is here. Good morning to Jay and Nor Auto Trading. We also got some people hanging out in the Discord. Good morning to Steven, Trader. Good morning to you. Dan is in the house. Desmond, welcome, welcome. And Rob, good morning to you. I think this is the first time ever where the Discord has given me more comments than the YouTube. DNK says, can we look at Nvidia and NQ? Yes, let's take a look. Take a look. It's on a chart. We're talking NQ. Let's actually go to the daily on the NQ. Okay, so much like the ES has had a multi-week long balance area, the NQ's been doing the same dance. Thursday was the attempt to break out of that. Friday was the rotation back up in. So bigger picture, the NQ is in exactly the same position as the ES. That is the highest probability being, if we can keep the momentum going this morning, if today we can keep the momentum up, in the days and weeks ahead, this market will turn around and head right back up for that balance area high, which I would call somewhere just above 22,000. Maybe 22,100 would be that balance area high. Okay? So again, all that matters this morning is what happens with the gap up. So let's take a look at the NQ on the market profile chart. So the gap is going to be from the opening price to Friday's high, which is at 29.45. There it is. 44. So 29.44 is the gap fill. If the market opens this morning and it does not get to that gap fill, it finds support somewhere above there, that is a gap and go. That is very bullish to see. First target to the upside is 21.188. Next target to the upside, I know it seems crazy, but next target to the upside is 21.524. Okay? That is if we get a gap and go. If the market fills the gap, it's identical to the ES. You don't want to spend time below 29.44. You want to just poke in there and then immediately pull right back up and out. As long as it does that, it's still bullish. The momentum is to the upside. And exactly the same as the ES, only if we spend time and bring in volume inside yesterday's range do we start to talk about a sell-off. If that happens and we become bearish, the first target to the downside is the overnight low and then the base of the spike up. So the overnight low is at 28.40 and the base of the spike up is a little higher than that. Is at 27.84. Okay. Remember that there is a very high probability, even if we get inside the previous day's range, even if we get inside the previous day's range and we spend time and we start to sell off, there is still a very high probability that that becomes support, the base of the spike, and then the market turns around and heads higher from there. So to only really get proper bearish, you need new selling below 27.84. And of course, that target's a move to 26.32. I'm not exactly sure why most tech stocks would react to crypto, a crypto announcement. It really does make a lot of sense to me, but Nvidia does, because obviously they use Nvidia chips to mine Bitcoin. So let's take a quick look at Nvidia. Oh boy. Oh, that is an ugly, ugly chart, my man. That is just not pretty. Oof. Yeah, so I just be real with you. I would not buy Nvidia right now. This is too much uncertainty. Yeah, this is just too much balance to really have a clear signal of where the market is going. For me to buy Nvidia now, I would either need to see it poke back up through what will likely be resistance right here around 130. I would need to see it get through there. I know you're like, but Charles, it's at 124. You're saying you'd rather buy it at 131 than at 124? That doesn't make any sense, my dude. But this could still act as resistance and take this market down. You don't have any clear break of anything here. So yeah, this to me is a no trade zone. Too much uncertainty. So if they can get back up through this resistance, turn it into support, then I can be bullish. Or if the selling were to continue from today, I could get bearish once again. But right here, you're just in the middle of a giant mess. So I see no clear technical edge there. Good morning to Baya Chewbacca in the Discord, and Doesman, who says that the NQ still looks better than his ex. Solid joke. Good morning to Marcin and Zach. Bookmap is saying if you want the fastest stream, you got to join in the Discord and watch there. You get a slightly faster connection. Danny G in the house. Good morning to you. Nap says we got PMI at 9:45 and ISM at 10. We'll look out for some volatility there. Good morning, Zach L. Will. Good morning to Will Black Swan. That's a very special Will right there. And Avon, good morning to you. Sorry, Aviv. Any questions from anyone in the chat? We got 5 more minutes till the market opens. Any questions for me? Hello, A. Hey to you. Vu, good morning. Dan says, can I take a look at Bitcoin? Yes, I can. Bitcoin. Now remember, guys, if you're buying Bitcoin, this is all going to depend on announcements from the president. Okay? So there's 2 different things that stand out to me about Bitcoin right now. Okay? The first and foremost is this trend line. This trend line right here, which has been acting as resistance, is the next sort of level of interest to me on Bitcoin. To say like, all right, let's see what's going to happen, right? We're going to hit that somewhere around 95,000, okay, 95 to 96,000. So we'll look for resistance there as we push up into that line. However, again, we're always talking about balance. This here was a very, very large balance area that the market was stuck in for a while on the Bitcoin. Okay. We broke out of that balance area and we already did a move the size of the balance area. So that means this market doesn't have to sell off any more than this. From a purely technical standpoint, this market dipped far enough to bring in strong hand buyers to where technically we don't need to ever come back to 77 again. That could be the permanent support for the market. What would tell us that that's what's happening? We want to stay above this level right here. We want to stay above, we'll call it, actually I think I'll mark this on the chart itself. Yeah, we'll say right there. So they want to stay above 92,000. If they can stay above 92,000 and this trend line does not act as resistance, the highest probability is a rotation back up to all-time highs. Okay? That's how balance works. You have a balance area, you're trying to make new highs, you can't make them, you need to dip, you need to put the market on sale. If discount shoppers step in and they buy the market when it's on sale, then it can turn around and head right back up to those all-time highs. So again, these are all giant ifs because all it's going to take is one word from Trump and the thing tanks or it takes off to the moon or anything can happen. So technicals aren't that helpful. But looking at Bitcoin purely from a technical point of view, this dip was bullish because it was an opportunity for stronger hands to step into the market. People that watched the market move from 60,000 to 100,000 and they were too scared to get in, they just had their chance. And as long as they stay above 92, it means they stepped in and the market's ready to continue higher. Okay. Now, if the market starts to sell off back down below 92, well, then we just need more chop and grind. We probably need to start balancing in this area down here. Okay. So that's why I say they got to keep this momentum going. But as of now, the corn looks bullish. 1 minute till market open. Uno momento. DNK says, how do you decide if it will close a gap before going up or just go up? The answer is I generally need to wait, but not that long, like literally 1 to 2 minutes. Like, you know, there's basically only one of 3 behaviors that can happen the moment the market opens. Oh, it's opening as I say it. It grinds around the opening price, grind, or it immediately starts to push to the overnight high, or it immediately starts to push to the gap fill. Now, if it opens and it immediately starts to push to the gap fill, I probably won't have time to get into a gap fill trade. So then what I'm doing is I'm asking myself, am I looking to buy support at yesterday's high? I'm focused on the gap and go if I don't get the gap fill trade. Now, let's say the market starts grinding around and it just grinds and grinds. It passes through the opening price a couple of times. Well, then I'm using my intuition to say, which do I think is it going to do? Is it going to go to the overnight high or is it going to fill the gap? I'm looking at the ticks. I'm looking at tempo. I'm looking at where the volume is coming in. Is the volume below the opening price or above it? Right now it's below. So that increases the odds of a gap fill, right? Once I feel confident that I understand that it's either going to be a gap and go or a gap fill, that's the trade I get in. If I'm getting in the gap and go trade, my support level that I'm putting my stop below is going to be inside the previous day's range. So if I'm going long right now as the market passes through the opening price, right? If I put a stop long right at the opening price and the market comes in and passes back through it, the stop for that trade is inside yesterday's range. Okay. And then I'm in my gap and go trade. If the market gets above the overnight high, then I'm moving my stop above my entry. Okay. Now let's say I'm in a gap fill trade. My take profit is always 1 point above the gap fill. Okay. So now this would be the moment of that gap and go trade. So the gap fill, the target would be 1 point above the gap fill and whatever the high was. So again, if right now I'm putting a stop sell order at the opening price because I think the market is going to fill the gap, once that fills, my stop is above whatever the high is at that moment, and the target is 1 point above the gap fill. That's how I trade gaps. So it always requires spending a minute or two watching the market and trying to figure out what is happening. And sometimes if it happens so fast, you miss it. You miss the initial move. So you may get a move straight to the overnight high that happens so fast you don't even have time to get in a trade. No worries. You just ask yourself what happens at the overnight high. Are we getting new buying or are we going to fail and pull back in? And then that's your trade. Or if it fills the gap so quick you don't have time to get in the trade, no worries. What happens on the gap fill? Does it find support, in which case you're long, or does it fail, in which case you're short, targeting a move to the overnight low? And you just take it one tick at a time. And because I was talking, I haven't even had time to think about it for today. How crazy is that? I would say right now this is a gap and go, but I do think they're going to come back for these lows because that's terrible taper. So right now, what seems like highest probability in my mind is we poke up, we get to the overnight high, we fail, we come back down and fill the gap. Just because I do not like the look of those lows. It's too exact. I would also say if I was in a gap and go trade, if I had to put a stop long down here when we were below the opening price, we got filled. My stop would have been down here at 59.63. Now I'd go ahead and move that stop above that entry because they got to hold support here at the halfback, 59.90, if they want to get to the overnight high. If not, we're going to come down for the gap fill. So if I was in a long from the opening price, getting my stop a tick above my entry, not an unreasonable move at this point. So then you say to me, you say, well, Charles, if you think if the market can't hold the half back, that it's probably going to come down and fill the gap, not only could you move your stop above your entry, you could put a stop sell order just below the opening price so that if it does fail and come back through, you're in the short. Yes, sir. I certainly can. And guess where I put my stop? Above the high of the day. Oh, Charles, you're talking too fast. We can't keep up. Well, join the brigade. I talk about this stuff all the time. Piratetraders.io/join. You know you want to. Good morning to Kiwi. Welcome. Zach says, have you done a Bookmap Blue Jacket? If you win, you get a gift of a free subscription. No, I haven't done it, but if you guys do the Blue Jacket and you guys want to send me your entries, you want to send me the trades that you're posting, I would be happy to give you feedback on it as well. So you're not just getting it from the other experts in the Bookmap community, you can get it from me as well. Hit me up. Always happy to advise. Free of charge. Out of the goodness of my heart. Dun dun. Dun dun. Dun 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 dun. Ta-da! All right, so passing back through the opening price means they likely need to fill the gap. They tried to get the gap and go, but they were not able to get all the way to the overnight high, which means they got to put the market on sale, looking for discount shoppers. Where are those discount shoppers? Likely at yesterday's high, 59.71. Excuse me. I'm also now looking at the Bookmap in the TraderMap Pro setting, which just filters out some of the bots and stuff like that, makes it a little cleaner, a little easier to read. And I'm just asking myself, what changes happen with liquidity? When you're dancing around an opening price like this, a gap and chop, where you're just going to keep passing through it over and over again, instant random changes in liquidity where like all of a sudden this disappears and liquidity starts to pile up down here, or all of a sudden this disappears and liquidity starts to pile up here, or whatever, sudden changes in liquidity are often followed by a change in price. So if price is going up and then suddenly something changed with the liquidity, price will turn around and start going down, and vice versa. Because it's the bots making us chop through the opening price again and again. And the bots' language is liquidity. They speak liquidity. In the Discord, Cervica? Sorry, can't say that name. Apologize. He says, is volume pressure index really helpful? And what he's talking about is this little window that you see down here in the middle at the bottom. And basically what this is measuring is the amount of volume that is, longs versus shorts, second by second throughout the day. And so if all of a sudden there's an overwhelming amount of liquidity going long or short, it will get above I think I have my settings like crazy, like 95%. Yeah, 95%. It'll get above that 95% level, meaning more than 95% of the liquidity at that exact moment is long or short, depending on whether it's red or green. Okay. Does that help me enter a trade? No, it does not, but it is incredibly helpful at noticing changes in the market. Often before the market does whatever it's going to do, it will sweep the order books, okay? Which basically means it will be like pushing up against a resistance level over and over again, right? It's pushing up against a resistance level. That resistance level is holding. Finally, in one of those pokes, it'll sweep through, whoosh, and it'll take out all the stops from everybody who's been shorting. Everybody who went short, they put their stops above those highs. So it'll sweep through really quick. At the moment that it does that, you better believe it's going to be a majority long, right? You're going to get more than 95% at that moment of the orders being long because they're stops, right? They're people that were shorting, and they've got all their stops, which is longs, waiting above that level. So when it sweeps through, you're going to get that little clicking noise. Click, 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 click. That's going to tell you we just swept the order books. Now, you don't know whether it's going to go up or down just because of that. Because one of two things is going to happen. You're either going to sweep the order books and then get FOMO and short covering and head higher, or you're going to sweep the order books and then boosh, you're going to go right back down because now you just, took out any, buyers, right? So either one can happen at that moment. Getting to positive 95 on this volume pressure index doesn't mean it's going to go up or down, but it does mean that's the moment I want to pay attention to the chart because that's the moment I'm going to find out whether or not, I want to go long or short. And sometimes this might take hours, right? Sometimes the market is grinding around for hours and nothing's happening and it's boring. And then all of a sudden I hear that click, 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 click. And I'm like, time to pay attention. Things are about to get interesting. And then I can look for opportunities. One of the things that I think kills a lot of newer traders is the feeling that they always have to be in trades. If the market is going up or down, if it has potential to get to this level or that, they have to be in trades. I disagree with that. I think you should only be in trades when all the market conditions are in your favor. Okay? If you're in a slow, grindy, choppy place where there's complete uncertainty, then the odds are not in your favor either way. It could break either way. So you want to wait for a change, wait for something to happen, wait for one side or the other to get squeezed, then you have the edge. That's your moment. And that's what I use that volume pressure indicator for, is to know when that moment comes where I need to pay attention. Okay, so what are we seeing here in terms of the games they're playing? They're trying to get the market to fill the gap, but my guess is there's going to be support once they do. Okay, so now we're a point above a gap fill. So if you've been playing along, in the beginning, there would have been a stop buy order when we were below the opening price, targeting a move to the overnight high. Once we got up here and we couldn't keep going, I would have moved my stop a tick above my entry. So I'd be one tick of profits after fees. That's like, $10. Okay. Then the market comes back down. I'm in a stop sell order when we pass back through the opening price using the high of the day as my stop and my target 1 point above the gap fill. That one, we came down, it filled, it came back up for a second, and then boom, came to my take profit. So I would be up, less than a tick from the first trade, and I would be up 13 points on the second trade. So now here we are. We're less than 15 minutes into the day, and I'm already up over 10 points. So guess what I get to do now? Sit back, relax, and wait for clarity. I don't have to force a gap and go trade. I don't have to get long immediately. I can relax a little bit, or I can get long with a wider stop, right? And now is not a time to force trades, because now is the moment where we find out bigger picture what's happening today. Remember what we said, the more time that we spend inside yesterday's range, the less bullish it becomes. The less time, the more bullish. So here we are poking in. Let's pay attention to how much time we spend in here. Do we immediately bounce right back out, or do we stay inside yesterday's range? The bounce is bullish. The stay is neutral. And I don't have to feel a need to force a trade. I can wait. I'm watching the volume to see how much it tapers off. I'm watching the order book to see if suddenly we stop stacking up volume below and we start to stack it up above. I'm paying attention to that volume. Do we get a sweep of the order book? Let's see what happens. So look at that. First poke into yesterday's range, we spent about a minute. We got a question here from the Discord from Duzman. He says, how do you interpret a range in relation to your stop? I find a range hard to anticipate since I put my stop wherever it can come. So I keep it fixed and try to enter with my stop below or above a micro distribution. So here's how I think about stops. Okay. And this might not be an overly satisfying answer, but this is just what works for me, which is I ask myself when I enter a trade, what is the place where if we got below that level or above that level, my trade idea is fundamentally wrong. So this morning I talked about how if I'm in a gap and go trade going long at the opening price, targeting to move to the overnight high, I'm using this node right here. That's where my stop would be below. Why? Because it could come down, as it just did. It could come down, find support there, and still go to the overnight high. So I don't want to get stopped out if the trade could still work. I want to pick a level where if the market gets below this support, yes, then it's definitely not going to the overnight high. It's probably going to the overnight low. So that's where I want to get stopped out, right? And then like, what did I say with the other one? With the opening price? Okay, the stop is above the current high of the day. So on the way back down, we had tried to get to the overnight high and couldn't. That was a reason to fill the gap, right? Well, what would tell me my trade idea to fill the gap is wrong? If we turn around and come back through that high. So it's always the place where my trade idea is invalidated, right? That is the place where I put my stop. Now, I know what you're thinking. You're like, but Charles, that means some trades you've got a 2-point stop and some trades you got a 20-point stop. How do you have consistent returns? You know, if like you win on a trade and you only win 5 points and then your next trade, you got a 20-point stop, you give all your gains back. This doesn't make any sense. Well, then you start to adjust your position size accordingly. So you say, I'm only going to risk 2% of my account size no matter where my stop is. So maybe if my stop is 2 points away, I get long with 3 contracts on the ES, right? But if my stop is 20 points away, I'm only going long with like 2 MES contracts. Okay. So the position sizing adjusts for the stop. And that way I'm always risking 2%. Every trade I take, I'm risking the same amount of loss. And my position size is adjusted accordingly. On the upside, if I can get into trades with tighter stops, where I'm trading with larger size, my rewards are much bigger. So if I can get into a trade where I'm only risking 2 points and I can get in with 3 ES contracts, well, now suddenly if the market moves 2 points, 5 points, 10 points, I'm making much larger profits. So once you start to think like this, the goal becomes to become a sniper at getting entries where you're taking the minimum possible risk. Because the less risk in terms of points, the larger the position size, the larger the rewards. So you just get bigger rewards if you take less risk. And this is just the way you should always trade. Why is that hard? Because it requires insane patience. You have to wait and wait and wait and be absolutely certain to get those great entries. So for some traders, that's what they should do. Okay, so now we're back inside yesterday's range. This is where things are less bullish to see. This morning at the market open, everything was bullish. Now we got our first signal of something less bullish, slightly more bearish, which is we did not immediately find support at the previous day's high. What does that tell me? We need to spend a little bit of time inside the overnight range to bring in those buyers. We didn't have the buyers up here, so we put the market on sale. We took it back to the previous day's high. We've now just found out we don't have buyers at the previous day's high, so we got to put the market on sale again to near the overnight lows. If this doesn't bring in the buyers, that's when I start to get bearish for a larger pullback. But as of now, I am still bullish, bigger picture, assuming we will find support in here and then turn around and head back up. So you're talking about different time frames. Over the next few minutes, I think we're going lower, but over the next few hours, I'm still thinking we go higher. We just haven't quite made the low yet. Yeah, this dip back inside yesterday's range has taken out a lot of longs getting stopped out here. Sometimes that's all you need. Squeeze the longs and then pa-choo. So I know these are going to sound like very contradictory things, but just hear me out here. I do think we still need one more poke to the downside. I do think they want to test this area near the overnight low. I think that because of the liquidity, because they're not pulling it from down here, but they are getting taper in volume. So there are buyers buying in here, but we just haven't quite squeezed the buyers from, the opening price yet. But we do have new participants going long. So I think we're going to have a dip, but I think that dip is going to get bought. Charles, that's too confusing. You think we're going to go down, but then you think we're going to go up? Yeah. Sorry, guys. I will feel confident we've made a low once the liquidity below starts to get thinner instead of getting darker. Right now, they're trying to use the liquidity to scare price away, and it's not working. Okay, so we're looking for support here around 51. This is a very important level. We are now inside the previous day's range. This is basically the last level for the market to find support and bounce up out of here and give us that gap and go type of momentum. If we trade below the overnight low, it means we don't have that gap and go momentum. So the buyers have got to hold 59.50 if they want to keep the momentum to the upside. Can they hold it? Dun dun. Dun dun. Dun 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 dun. Any of you that are new and don't know me, you're like, what is wrong with this guy? There's something wrong with his brain parts. Okay, so we got the bounce and support. We got rid of the liquidity that was below price. Now what we're looking for is taper. We're looking for them to stay here long enough that they can make the contracts less and less and less towards the lows. Right now we got 24,000, 26,000, and then 21, and then 22. We want it to be bigger numbers going down. So we want to add a little more liquidity in here, but not poke back on the low. If we get that good taper, we know we have a good low. If not, we need another dip. Oh boy. Oh boy. See that liquidity at 30? We are also right at 10 o'clock, so I know we got a news drop. Great place to do a look below and fail of the overnight low, right when the news hits. Okay, so there's your news drop. If it weren't happening because of news, this would be very bearish. But because it's news, we have to wait for the liquidity to come back to know whether or not this really is new selling or just a reaction to the news. Oh my goodness, the actual PMI was 50.3 and it was forecast to be 50.7. Oh no! Oh no! Zelensky saying the end of war with Russia is very, very far away. Why the fuck would he say that? Okay, so you guys can see how Bookmap went dark right at 10 a.m. You guys see that? How there was liquidity all over the place, and then right at 10 a.m. it all disappeared. So now we're watching what happens as that liquidity starts to return to the order books. Do we get back up inside the overnight range? If we do, if we pop right back up into the overnight range, we basically just ignore that liquidation break because it was just because of the news. Now, if we start to get new selling here, if we turn the overnight low into resistance, well, then we get bearish. Let's see what happens. Okay, the liquidity is back and we have new selling. So you know what that means. I've lost that bullish feeling. Whoa, that bullish feeling. I've lost that bullish feeling and it's gone, gone, gone. Unless we test the base of the spike and find support there. Whoa, whoa, whoa. Okay, so talking about momentum. When we opened with the gap up this morning, we had momentum. We absolutely could have kept going to the upside. First sign we were running out, couldn't even get to the overnight high. So then we came back to test the previous day's high. Maybe we would find buyers there. If we did, we'd be bullish, but we did not. So we're not bullish, right? Came back down, tested the overnight low, looked for buyers there. We did not have them. So we can't be bullish anymore. We've lost that bullish feeling. However, as we established earlier today, as long as the market can make a low somewhere above the base of the spike, and maybe exactly at the base of the spike, 59.15, then we could still turn around and keep going higher because the momentum is from the base of the spike. This is where we started to squeeze sellers on Friday. Okay? So new sellers aren't really going to get confident unless we get below there. So I would say I am now looking for, and again, timing this is tricky. I'm now looking for the market to turn this area into support right here and then turn around and come back up. Depending on how quickly it happens, will tell us what to expect next. If the market immediately right now in the B period finds support and turns around and gets above the halfback, well, then we could start trending higher and this could be a very bullish day. If we stay here inside yesterday's range for the next 30 minutes, and then we print the C period down here inside yesterday's range, that increases the odds we will start one time framing lower, which basically just means we'll probably have a sideways day inside yesterday's range. Okay. Remember what I talked about at the open. To truly think that this thing is going to crash and burn, there is still a lot it has to do. It has to get below the base of the spike and get new selling. It has to get down to the VOPC and get new selling. Only then can you really think this thing is going to continue its momentum lower. Otherwise, all this is a dip, right? All this is a place for buyers to step in at a slightly better location than where we opened. And that is how I think about it. Short term, I'm neutral. Longer term, still bullish. Any final questions from the chat before we say goodbye? Before we say farewell? Frito says, even those that have been with you for a long time think there's something wrong. Thanks, man. Thanks. It's true. Michael says, found great value in your feed. Thank you very much. Appreciate you. If you found great value, you might push the thumbs up button. One small push for you. One giant thank you for the pirate. Thank you to everyone in the Discord. The Discord's been on fire today with the comments. I appreciate all of you. I will go back later and answer those one by one if I missed something. But for now, I must say goodbye. Farewell, au revoir, and head on over to the private stream with the brigade members. Again, if you're interested in joining, you just head to piratetraders.io/join. You pay your $20 and then you're in, baby. And every day you get to hear my insights live. All right, guys, have a good rest of your day, and we'll see you next Monday. Members of the brigade, let's set sail.